Hi, I'm Steph Hinds. I'm one of the founders of Growthwise. We are an accounting business located in Newcastle, New South Wales. I've been working with Camplify basically since the beginning, and one of the things that we did for Camplify was contact the ATO and kind of get a really good gauge and understanding on what the ATO expected from all of the Camplify owners when they were looking at tax. Coming up to tax time, it's always important that you have all of your records ready to go. Now, the ATO expects every single taxpayer to be paying tax on income they earn from a whole host of things, and that includes your Camplify income or any other income that you have from the sharing economy. Now, Camplify is amazing in that it actually provides you with a whole host of the information that you need come tax time, but the most important thing is that you're understanding that you do have to declare this as income in your tax return. No one likes paying tax. That's always the Australian way, but unfortunately we all do have to pay tax on our sharing income. But the good news is we also get to claim a host of deductions at the same time. So when we're looking at your tax return at the end of the year, you need to declare all of the income that you have earned in that financial year from hiring out your van on Camplify. Now, Camplify provides you with a fantastic annual tax statement that has all of that detail of the income side on that statement. Camplify also have an amazing tax pack that you can download that helps you understand the type of things that you can actually claim against that income that you're putting in your tax return. These are things like the insurance that you pay on your van, the depreciation from actually purchasing the van, your listing fees, anything that you're doing in terms of cleaning, any repairs and maintenance that you're doing on the van. So all of those costs that you actually incur as part of the running costs of having the van in the first place, as well as any running costs that you have for promoting the van or anything else that you're putting in there to actually give that experience to the hirers, all becomes a tax deduction for you. There is one but rule, and this rule is if you utilise the van for personal use, we actually need to take out some of those deductions because you're not claiming the van as an entire 100% business use style van. Now, Camplify also provides you with the information in order to help you do this by giving you the number of days and nights that you have taken the van off hire that you're therefore using it for personally, which makes doing your tax a breeze. So if you're using your van to earn additional income, you will report that income basically as other income and other deductions in your personal income tax return. For those of you who are running this hire as a business, i.e. you've got an ABN, you might also be registered for GST if you've got $75,000 or more in income in a year. You're actually going to report that in the business section of the tax return. And that's a really important thing to note. If this is additional income for you, you don't need to have an ABN and you don't need to be reporting everything else that you do from a business standpoint. It's just other income and other deductions. But if you've got multiple vans, if you're up near that GST threshold, you've got your ABN and you're running this as a business, then you're going to be declaring all of the income and all of those expenses that we talked about before in the business section of your tax return. Now, one of the big questions we get asked is, it's one thing to declare the income and the expenses, but how do you go about actually paying that tax? For most of you, this will happen at the end of the year when you lodge your income tax return. And in simple terms, whatever income that you earn from Camplify, and let's be simple and say that that's $10,000 for the year, that will get added to your normal taxable income. If you've got no other income in the year, then obviously you're not going to be paying any tax on that income. If you've got, say, $50,000 in employment income for the year, then you're going to be paying tax on that extra $10,000 at your marginal tax rates. And depending on how much you earn, will be depending on how much you need to pay. The best thing that you can do though is always ensure you're putting a portion of your Camplify earnings away for tax. Now this portion may differ for a lot of you. Some of you may be earning $150,000 in a year, and obviously you need to be putting away that 39% tax. For those of you who aren't earning that amount of money, you'll need to put somewhere between 35, if we round up, and 40% tax away on your net income. So remember, this is not just the money that you earn from Camplify, it's the money that you earn less all of those things that you can claim as a tax deduction. Now, when you lodge your tax return at the end of the year, you get this thing called a notice of assessment, and that will tell you how much tax you actually need to pay. For those of you who are earning $10,000 plus from your vans, you'll then go into what's classified as the pay-as-you-go system with the ATO. And that means you'll be paying that tax on a quarterly basis. And so you'll pay that at the end of September, the end of December, the end of March, and the end of June. And that tax that you've paid, just like the tax that you pay as an employee, gets taken as a credit when the ATO actually assess your tax return at the end of the year. One of the big things that everybody needs to do, like everything else with their income tax return, is keep meticulously good records. Without the record of what you've actually paid money for, you can't actually claim the tax deduction. So that's really important that you keep all of those records ready for the end of the year. Now, Camplify have that amazing tax pack where you can type all of that information in, and it gives you basically the tax deductions that you get to claim at the end. And it'll take you through and guide you through, okay, if you do have personal use, what do you need to take out and how much of that do you need to take out based on those nights personal versus nights available for hire. But the most important thing is to ensure that you're keeping everything that you possibly can have a tax deduction for, so that you're not paying any more tax than you need to. So if you've got any questions at all, you should definitely reach out to Camplify because they do have amazing resources at hand. Happy end of financial year.